as investment advice or a recommendation to buy shares in the company featured. Welcome to this StockBox interview. It's not red, it's not amber, it's green. Hello, Alan.
Hello, Mark. That was a novel introduction.
Yeah, something a bit different, yeah.
Yeah, indeed. It's yeah, and it's Friday.
It's Friday, of course it is. We've got to be in a good mood on Friday, haven't we, Alan?
It's the run of the weekend and the prospect of maybe a beer or two tonight. So
maybe a beer or two. Yeah. Are you doing okay?
Yes, doing fine. I mean, we're locked down as per usual, but yeah. It's been a good start to the year portfolio wise. Certainly, we've seen some good moves. Just noting the progress that Eddie Stobart's made this morning. Of course, we spoke about Eddie Stobart last year, didn't we?
Yes.
And with interesting, really seeing some of these projects coming to, or not just fruition, but I think also being appreciated by the market for the nascent value they contain. It's that's the exciting thing. I think a lot of stocks that have been in the doldrums for years are being revisited, re-examined, and I think with the job that we're doing, just bringing the investment propositions to the attention of the investing community, it's helping that process.
Absolutely, it's definitely been a good start to the year, let's hope it continues for a little while longer.
I hope so, but the market, as we know, can be a fickle mistress.
It can. It certainly can. So today you want to enlighten us onto Echo, but also a catch-up on Power Metal Resources as well.
Yeah, well, I think Power Metal. If we start with Power Metal,
sure.
Of course, that there is just this wall of news. It's relentless. It's full credit to Paul Johnson and the team there for driving so many projects forward, and also developing so many projects at such a rate of knots too. I think you could look at so many microcap or junior mining companies and companies with one project. You might get a news announcement every few months, and that's it. But Paul and his team have got nine projects on the go all over the world in different time zones, and there's progress each day. They're driving as hard as they possibly can. So I'm just going to just a quick recap on all of the projects, and then of course we've had some significant developments this year, particularly at Malopa Farms in Botswana. So the projects from top to bottom. Of course, we've all heard about the Australian goldfields in Victoria and southern Australia. Some limitation of movement due to COVID over the past year, but that's now been lifted. We've got a number of British companies operating there. ECR Minerals, of course, we've spoken about on many occasions, but Power Metal have a raft of licenses across the region, adjacent to and close to existing producing gold mines, and the arrangement there is a joint venture with Red Rock Resources. Of course, we've also spoken about Andrew Bell and the Red Rock beforehand, but the two companies, Power Metal and Red Rock, have pooled their resources together to develop these assets in Victoria. And of course, it's all about gold at the moment. And I don't think gold needs any introduction, or neither does the rationale for investing into gold assets need any introduction at the moment. I think that's well documented. So that is progressing. The team have appointed a chap called David Holden there as exploration manager. David was working on Lion Gold's Ballarat mine in 2018. He was also acted as technical advisor to the New Zealand government. So David is very experienced, well known on the field there, and he's driving the Australia Goldfields or the Red Rock Australasia joint venture forward. So we then come to Botswana. There are several projects underway in Botswana. We have three, in fact. The Ditau Camp project, which is a rare earths project, and Ditau has developed that has progressed this year. There have been we also have the Kalahari Copperbelt project, which is a joint venture again with Kavango Resources. That's a 50-50 joint venture, and again, the Kalahari Copperbelt project has progressed in terms of exploration, sampling, and so on. All of these projects are at different stages, and it's important. It literally every day something changes. So I think it's useful to have these regular updates on the power metal exploration asset portfolio, simply because you can get to the end of next week and something will have changed. So it's a fast moving investment proposition. We then come to, of course, the Malopa Farms complex project, which is a nickel, copper, and platinum group metals project where Power Metal has the option to earn into a just under 51% ownership of the prospect. So the drilling is currently underway at the Malopa Farms project, and during the core logging process, they have noted visible sulfides, in keeping with the original expectations from the sampling, and it's. Paul Johnson said in the most recent announcement regarding that, the noting of those sulfides was a potentially significant development, opening up the real potential for platinum group metal mineralization besides the base metals that were originally targeted. So they're in the process of refining new drill targets. This is a huge area. It's important to note it's a huge area, and as we progress, the next phase for this would be, of course, the drill cores once the drilling program is completed. Where there's visible sulfides, of course, the company will continue to report that. Those drill cores, will then go off to the laboratory, will be assessed, and then we'll get a reading back, and then probably on from that, some further modelling will take place, and then we move to the next phase once we get a better understanding of the metal that's in that region within that geological anomaly. We can then move towards a JORC resource estimate, and of course that places a firm valuation then on that asset. And I've said before, when we've spoken about Power Metal, literally any one of these assets comes to fruition, or gets to a JORC resource standards, it could dwarf the current market cap. So let's just say that there's a recognition, a JORC standard is applied to Malopa Farms. We then move to the next stage, which of course is then developing into a miner and processing plant with everything that entails. Now, Paul and his partners, I'm absolutely sure, given the resource they've shown to date, Paul's history, and the other teams sort of working with them, they would be able to probably put together a team to finance that and take that forward. There's no doubt about that whatsoever. But given the way the resources and commodities sector is pushing forward at the moment, a lot of the large mining companies such as Rio Tinto, such as Billiton, and others are looking all the time for opportunities to expand their portfolio and farm into projects like this. So it's at that point that I think, if there's a mining major that wants to add a nickel or PGM asset to its portfolio, it's at that point then those conversations will start to take place, and that's when it gets really exciting. That's when you see the project really attain a valuation. An example of that, of course, is Great Link Gold in Australia with the Havieron prospect. The farm in there there's a 4.2 million ounce gold asset at Havieron, and Greatland Gold own, I think, 30% of that now, and of course the farm in there with Newcrest Mining is rapidly developing, and it's given Greatland Gold a market cap well in excess of £1 billion sterling now. So, and that's moved from a company that was similar in size to Power Metals to £1 billion company, and that's just on one asset. And I think that's what's so exciting about the Power Metal investment proposition. It's not, if you wanted to invest into a junior mining into the junior mining sector and keep your risk as low as possible, I don't think there's any better company out there that offers such a proposition. As we go on now, we look at the other projects that the company's engaged with. There's a project in Cameroon, which is a cobalt and nickel project. It's 100% owned by Power Metal. There are exploration has been moving forward there in recent months. We then, of course, moved to the DRC, to Democratic Republic of Congo. We have the Kasinga project, copper project. That's also assay results have confirmed significant copper and cobalt targets there. Geophysics is underway, and the work is underway there to move convert the license to an exploration permit and a production license with a 25-year mine life. Again, Power Metal are 70% owners there. We then moved to Tanzania, where we have a joint venture, 65% owned by Katoro Gold, 35% owned by Power Metal Resources, another nickel, gold, and platinum group metal, nickel, copper, platinum group metal asset, which is being progressed. Drilling is underway as we speak. The drill team were mobilized late last year, and we're getting reports back of drilling progress in the region now. And again, that's slightly behind where Malopa Farms is, but we'll have further results and news there soon. And again, the Haneti project will go through the same process. So the process I've just described, the phases of development will take place there too once the asset's been proved up. We then hop over the Atlantic. We get to the USA. We have the Alamo Gold Project. Alamo Gold Project, Power Metals has an option to earn up to 75% there. Field work and sampling is taking place there at present, and we'll have some more news on that in the near future. And then, of course, we move to Canada, where we have the Silver Peak project in British Columbia. It's adjacent to the Eureka Victoria Silver Mine, which is the first ever Crown-granted mineral property in Canada, and again, the grades of silver that have been recovered there were referred to by Paul Johnson as bonanza grade. So very high quality samples recovered from there, and again, that's follow-on plans are in place to further develop that asset as we go forward. So you've got 9 projects all over the world that high quality projects that have been assessed by the team, the geo team, before they go in and get involved. So 2021 is set to be a huge year of news for Power Metal, without any doubt at all. And of course, the company are managing all this. They're funding all this from internal funds. There was a business update earlier this week where the company updated on business progress, the amount of money the company had in the bank. Paul Johnson also referred to the warrants, the warrant exercises that have been taking place. They've raised nearly getting over for 2 million in warrant exercises now since August last year, and because they've been able to have these warrants exercised, that money's been coming into the coffers. There was no need to embark on a fundraising last November, which had been planned and forecast by Paul. So that's great news. So all of the all of the cash requirements to fund and drive these projects forward is being funded in-house, and the working position of the company as at the 12th of January, start of this week, was about 2.7 million, which is a very strong position to be in, considering where all of the projects are. So certainly, I think for 2021, there's everything to play for. The shares are currently trading at just on 3p. Excuse me. They're giving the company a market cap of 29 million, which is derisory, given the quality of the assets the group has around the world.
So much going on there, isn't there? So much going on. Do you have a favourite, or do you love them all equally, Alan, as an investor?
Well, what I like is, if you wanted to buy into a fund, if you wanted to buy a fund that had invested into a range of commodities and mining assets at different phases of development around the world, you can, Power Metal, rather than being a share, it's more like a fund, because you've got exposure to all these different metals in different parts of the world at various phases of development. And there are other companies that have done or acted in a similar way. Of course, Cadence Minerals is another example, which has lithium assets and then a big iron ore asset in Brazil that are at different phases. But again, I think in terms of the number and range of projects under one roof, as it were, I don't think there's any better opportunity that gives that broad spread of exposure right now out there on AIM than Power Metal Resources.
Yeah, good. I'd agree with you there. Fantastic. Well, thank you very much for updating everyone on Power Metals. I'm sure we'll be talking about it again soon.
I have no doubt at all.
Yeah, absolutely. Okay, so shall we move on to the other one? So it's Echo Energy, this one.
Yeah, this is Echo Energy. This is an interesting company, and I spoke to the chief executive, Martin Hull, before Christmas, and was just really interested in the developments and changes that were taking place there. So Echo Energy currently has a market cap of 8.5 million. Shares are trading at 0.65 of a pence, having been as high as 2.5 pence on the year and as low as 0.18 pence. So Echo has exposure to Latin America, and it's seeking to exploit oil and gas assets, both across the south of Argentina, and also in Bolivia, in South America. So in the south of Argentina in particular, a lot of the land is very barren. It's sparsely populated, but it's very rich in minerals, and there's a huge amount of latent resource under the ground in terms of oil and gas, and this has been well scoped out. I'm just going to mention, before I look at the main core of the assets, the company had an asset in southern Argentina called Tapiaiki, which was an exploration joint venture with Compañía General de Combustibles, CGC, where Echo owned 19%. This was costing the company a considerable amount of money, so it took the decision. It was announced a few days ago that it has now allowed that option to lapse. So there's no further financial commitments going forward to Tapiaiki. So the key focus of Echo is in Santa Cruz Sur, which is right down the south of the country. There are a series of producing gas fields at Chirilas, Campo Bremen, and Oceana. There's an oil and gas field at Moyaki, and also at Palermo Iki. There's a gas field and an oil well planned for development. The company is also able to export it's able to pump the gas into the San Martin trunk line, which distributes the gas throughout. It's the main trunk line that distributes the gas throughout Brazil. And there's also a port at Punta Loyola where the company is able to export oil. oil reserves in that area of 4.3, worst case 4.3 million barrels of oil, best case 13.7 million barrels of oil. So as with all these, it's probably somewhere between the two. But certainly the company, I think it's fair to say those assets were, given the events of 2019 and of course, when the oil price basically went into reverse, some of those assets were almost put on care and maintenance. But that's changed quite dramatically in that the oil wells have been returned to production. December was a hugely eventful month for the company, and I'll go through those in detail in a second when I finished just outlining the overall investment proposition. So we've discussed Santa Cruz, sir. There's also in Bolivia, in the Andean footholds of the Tarija Basin, there are two assets. I should say with the Santa Cruz, just before I go on to Bolivia, it's the Santa Cruz assets. Echo owns 70% of the assets, and Roche is the operator, owns 30%. So that's obviously the key for the group going forward. In Bolivia, then we see Echo with two assets. The Huayco asset, which Echo owns 80% of. This is 75 square kilometer region, and this is close to the Margarita and Sabalo liquid natural gas processing facilities. And is almost if gas is discovered or if gas is recovered from the region, it's almost a plug and play solution into existing gas export pipelines. And Rio Salado 2, which is the area surrounding Huayco, it's a 500 square kilometer region, and here Echo has an agreement with local operator YPFB. It's a technical evaluation agreement, and terms are in the process of being developed and taken forward. So that's basically that's what Echo is all about. It's about developing oil and gas assets and also earning revenues from production. Mm-hmm. In September, the company announced half-year revenues. Now, despite the stalling in the oil price, first half revenue increased to $5.6 million, up from $2.7 million previously. Losses were reduced due to careful cash management to $5.7 million from $7.7 million previously. And the Martin Hole commented at that time that the company had a wide portfolio of low-cost workovers across 16 wells to boost production and reserved, and they were undertaking a major cost-saving drive. In December, which is when things started to take off, and obviously, if you take a look at the chart, you'll see the action that took place there. The company. The company said in December that it had cash in the UK and Argentina of $655,000, and that Santa Cruz production was in line at 1,990 barrels of oil per day and just over 10 million square cubic feet of gas per day from the assets across Santa Cruz. Significantly, and this is one of the things that's held the share price performance back for Echo, the group restructured a €5 million debt facility with Lombard Odier, and they've pushed it forward so it matures in April 2025. There are no further cash interest payments due, and the principal will be repaid in 5 installments of €600,000, and that will take place nearer to 2025. And it's also negotiating to restructure a $20 million senior loan note, 8%. At 8%, it's also seeking to restructure that and defer that to 2025. Also on December 1st, it announced a $700,000 fundraising at 0.3p to provide further working capital. December the 2nd, one of the key issues that's been affecting the group is the fact that it has to pay VAT internally in Argentina. But the group announced that its subsidiary in Argentina was no longer required to pay VAT on domestic income, and that was previously at a rate of 10.5%, so not as much as we pay here in the UK. But so on the back of that, it's in the process of reclaiming $1.4 million. December the 8th, 4 oil wells at Chorizo returned to production, adding a further 50 barrels of oil per day. And there were significant, the Martin Hole said on December the 8th, there was significant potential for further reopenings, which would add more to production, of course. And then just before Christmas, following the 700,000 fundraising at 0.3p, the board said that there was a lot of additional demand from investors for the stock. So they've raised a further 856,000 sterling at 0.5p. And at that point, they decided to let the Tapiaki option lapse. It was announced. I said January. It was actually just before Christmas, so my apologies. Coming to January, further gas sales contracts were sold at a premium to the spot rate. And the group announced that 60% of Santa Cruz production daily was sold under secured contracts, all at a premium to the spot rate. Of course, they reverse the spot rate if they're unable to move the gas on. And then on January the 8th, in Bolivia, the company signed a cooperative agreement with GTL International, a subsidiary of Eurobacorp, to seek and execute energy sector transactions in Bolivia. So across the Huayco and Rio Salado assets. So that brings us to date with the developments. But the main points, I think, are that the company has a market cap of 8.5 million. Turnover increased on the half year, and although clearly it was a difficult year COVID-wise, with the increased production now across the wells on the Santa Cruz area, I think there's every potential for a reasonably significant uplift in production, of course, revenues at the full year. Added to which, the company is now fully funded for its activities going forward, certainly for the best part of this year. And interestingly, I noted that there were two TR1s announced on Wednesday. Two gentlemen, Sebastian Marr and Clive Roberts, had taken 4.9% and 4% of the company respectively, and had come in as major shareholders. So interesting developments. Nonetheless, obviously speculative, given that oil is doing what oil is doing. But we, of course, discussed Nosterterra Oil and Gas a few weeks ago, and that's probably a similar company. It's developing small oil assets and earning money from production. But I think Echo, given what it's done and the money it's raised recently, has an opportunity to really deliver some good returns for shareholders in the coming year.
And the fact that it's revenue generating is obviously quite significant as well. Do you think that will affect them perhaps need to raise in the future?
Well, I think it depends. I mean, the oil, as they said back in September with the half year announcements, there are many wells and gas and opportunities to develop gas production across the Santa Cruz region, and with that wide portfolio, it's that they've identified a series of low-cost workovers to boost production and, of course, reserves. So they've been very frugal in terms of allocating money and resources, and I think they're managing funds very carefully, and that's been very evident. So I think we will see a jump in production, and I think so we've got 856k, an existing 655,000 in the bank at the first of at December the 1st. So I think there's probably about 2 million or so there to develop, fund these low cost workovers, boost production, and of course take advantage of any opportunities that they might find in Bolivia.
Okay, Great. Well, thank you very much, Alan. So that's Power Metal Resources and Echo Energy.
Thank you, Mark.
Thank you for listening to this StockBox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockBoxMedia.